Welcome to today's morning report on Friday the 13th of May with me, Richard Brown, market analyst at Handtech Markets. It is Friday the 13th and markets have not started in a great vein. It's not a nightmare scenario yet, but certainly the sentiment isn't pretty negative. Stock market's sort of around about 0.5% lower. And you're seeing a bit of a safe haven shift actually in the last sort of day or so really. This dollar is just starting to strengthen again. It had been consolidating but starting to sort of regain the upside and regain the strength, so that's interesting in itself. But also you're seeing the safe haven moves such as the yen strengthening. Also the gold price is also higher today, so there is sort of a safe haven shift. And not only that, you're seeing treasury yields which continue to fall on the 10-year, which again just suggests there is a concern out there over potential for future growth in the system. So that tends to be the theme of the day, sort of like a safe haven shift, but nothing too drastic yet, but it is still developing at the moment. What have we got to look forward to today? Well, the markets are going to be looking out for predominantly retail sales, but prior to that we do have the European GDP, Eurozone GDP, which is expected to come out at 0.6% for the quarter, and it's sort of continuing this sort of improvement that we've seen actually in recent quarters, and but the most predominantly we'll be focusing on, I think, retail sales into the afternoon. 1:30 that is expected to be coming out at plus 0.5% for the month, which is the highest of the year. But also for the year-on-year data, that would be continuing the or sort of regaining the upside initiative if that were to happen. Around about 2.5% is what we're seeing on retail sales at the moment. So you're continuing to see an improvement in retail sales, but it'll be interesting because we had data out from Macy's this week, which was disappointing the market and suggests that retail sales are not all that positive. So perhaps this data today will sort of obviously add more detail on it. Not only that, you've got the Michigan sentiment at 3 o'clock, and that is expected to come at a 90.0, which is slightly higher than the 89.0, which was the final reading of last month. Just prior to that, at 1:30, you do also have the PPI inflation data for the States, and that's expected to come at plus 0.2 for the year. So that would be actually the highest since the end of 2014. So that would be continuing this sort of improving trend that you're getting on inflation in the States that we've seen in recent months. So my chart of the day is the dollar CAD, and the CAD is an interesting chart actually, because it's had this the CAD has had this correction, which is after strong move in the Canadian dollar. The Canadian dollar has weakened, pulling dollar CAD higher, but it's back into this resistance band now overhead, and this is, I think, a pretty pivotal band. That's an old 28.35 was an old key floor. Actually, old key pivot back from March 2015 as well. So that is a big level that the market was looking at, but it sort of coincided with the sort of old lows from these closing levels of these trading days through March and April, and then that caught the high in April, and it sort of pretty much caught the high again this month before turning lower. So the market is still clearly considering that as a key overhead resistance level, a key barrier to gains, and whether it can break back through it or not remains to be seen, because we've seen an improvement in momentum and the RSI pushing above 50 and holding above 50 despite this sort of near-term drift lower again. But you do have a confirmed crossover sell signal on the stochastics today, which is a concern, and also the MACD lines have basically just unwound to neutral. So it's pretty mixed on the near-term signals, and obviously this key resistance overhead, which comes in at 29.70 area on a closing basis, that is clearly a level that the market is looking at. So it needs to be finding support and pushing through that. Now you had this sort of doji candle yesterday pushing up higher from the low at 27.70 and rebounding, and that is clearly the support in place now. But we've seen this improvement as I said in the last few hours, and that is starting to improve the hourly MACD lines and the hourly RSI as well. But you need to see this improvement continuing. I think 60. I tend to talk about 60 quite a lot on the RSI, because I think that is sort of the difference between sort of improving momentum and stronger momentum. And I think what we have got on the near-term basis is a sort of improving momentum on the hourly RSI, but that needs to turn into strong momentum. Otherwise, you could see that movement rolling over. And not only that, you've got the hourly MACD lines back to neutral, so you're sort of back at a bit of a pivot area as well. Not only that, you've seen the unwinding of the price back towards the resistance around 28.80 towards 30 figure. Sorry, 29 figure, which has been again a bit of a sort of an old pivot line as well. So you've got sort of 20 ticks worth of resistance there between 28.80 and 29 figure, where you're sort of finding the near-term barrier potentially, and as well that is also where the moving averages are now currently lying. So it's quite an important time actually. You would argue near-term for the dollar CAD, and it would be interesting to see how this one develops today with the retail sales data, and also how the oil prices started to drop away again. Dropping oil prices tends to be negative for the CAD, so that would be pulling dollar CAD higher. So I wish you good luck in your trading today, and I will speak to you later.